Welcome back. Optimism from Friday's jobs report sparking a rally on Wall Street today. We saw gains across the board with the Dow and the S&P both closing at record highs, and stocks really continuing to outperform under President Biden despite the looming threat of higher taxes. We want to bring Yahoo Finance's Rick Newman for a little bit more on this. And Rick, we talked about the resiliency of the market over the last several months or several year, I guess you could say at this point. But when we take a look forward here, do you think the threat of higher taxes, is it ever going to hit the stock market?
It certainly hasn't yet. And I think this is an elemental question for our audience. Is this going to drag down stock prices or not? So far, what's happening, I ran the numbers today, Shauna. S&P 500 up 20% since Biden was elected back in early November. For people who are wondering, the stock market took off after Donald Trump got elected in 2016 because suddenly there was a lot of anticipation of lower corporate taxes, which did in fact materialize. But during the same period after Trump got elected in 2016, S&P 500 up only 10%. So Biden up 20, stocks up 20% under Biden in these first 75 days, only 10% under Trump. So I guess that means, there's obviously a lot more going on than a new president coming in. But look, what we've been talking about for the last 75 days, market seems to love the stimulus plan, does not really care about everything it's going to add to the federal debt in the out years, as they call them. Market also seemed pretty excited about Biden's infrastructure plan, whatever it turns out to be. So for the time being, this is outweighing any concern about higher corporate taxes, which of course would lower corporate profits.
Regarding higher corporate taxes, it would seem the most powerful man or person in Washington, D.C. is Senator Joe Manchin, who today said not going to go for 28%, maybe 25%. My question to you, Rick, is, does it really matter? Does any corporation even pay 21% with all the deductions and the write-offs they get?
I think it does matter. First of all, it does matter politically. So 28% is Biden's ask, if you will, his opening bid. And when Biden was elected and he really got serious about putting this before Congress, I think he probably knew he might not get 28%. He might get 25% or 26%. And because Democrats only have a one-vote majority in the Senate, that's why Joe Manchin, who's a centrist, almost Republican on a few policies, fairly conservative, that's why his vote is so important. Also, Senator Kristen Sinema from Arizona and John Tester from Montana, they're also pretty close to Manchin. So they are the new kingmakers. But you're right. It used to be Jay Powell, the Fed chair, was the most important person regarding the economy. And now it does seem to be Joe Manchin. There will be companies for which, the difference between a 25% rate and a 28% rate, that is going to ding, the profit margins a little bit. And if stock values are a measure of future returns, as we think they are, if it's just numerical, sure, it will affect markets a little bit. But something's always, pushing stock prices down, or at least pushing in that direction. And of course, what matters is the overall impact. And so far, it has just been great for the market.
Yeah, and Rick, talking about how great it's been for the market. The Biden cabinet officials, they have been touting the recent econ data that we've gotten, the stock market's performance, I guess more so the econ data. But how much credit do they deserve for this? And how much is this kind of just a continuation? If, say, President Trump did win the election, will we be looking at a similar scenario?
I think there are two answers to that. And we faced the same question with Trump a lot because the economy was pretty good under Trump. First of all, most presidents get way too much credit or blame for what happens to the economy under their watch. So that's the first answer. And the second answer is it doesn't matter because voters, when they go to the polls, and they will go vote again in 18 months from now, perhaps in the 2022 midterm elections. That by and large, as it generally has been when we have not been at war, voters typically reward or punish the incumbent president for the state of the economy and how good they feel about their own prospects. So that is going to be the case for Biden in 2022. And even though he's not running, there's a real chance Democrats could lose either the House or the Senate or both. So the state of the economy really matters so that Biden can tell voters and his fellow Democrats in Congress can tell voters in the fall of 2022, look, you're a lot better off than you were 2 years ago. Why would you want to mess this up? And I think that is the message we're likely to hear by the time we get there.
Rick, but we heard from Jamie Harrison that not everyone is better off. Here's what Marty Walsh, the labor secretary, said.
As far as black people and people of color, is opportunities for people to get jobs. I mean, I spent the last 7 years as mayor of Boston, and anytime we talked about unemployment, we would, whatever the unemployment rate was, we would double it for communities of color, in particular Black, Latino, the Black and Latino community, and that's always been a problem. That's a challenge, and in the American Jobs Plan, President Biden intends to address some of that.
Will he be successful, Rick?
Yeah, it's appropriate for Biden and his cabinet advisors to be saying, look, we know there are people who are still suffering out there. And in fact, President Obama made the mistake in 2010 when Biden was his vice president of telling everybody, look how far we've come. The economy is really doing great. Democrats got crushed in those midterm elections. That was one of the defeats Obama called a shellacking. They lost partial control of Congress. And Biden, of course, was there for that. So he's going to be careful not to make that same mistake. Personally, my best guess is the economic story is going to be pretty good a year and a half from now. It looks like we are going to see a job boom over the next few months for sure. Obviously, the end of the pandemic is coming into view and people are excited to get out and spend money. So are we going to get to the overheating phase that we've been talking about? Is inflation going to materialize? Is the Fed going to have to take the punch bowl away and raise rates sooner than predicted? I mean, I'm very interested to see how this plays out. We've never had this much fiscal stimulus, probably infrastructure spending coming when arguably the economy is already back on its way to recovery. So is this all going to look as rosy as we think it might in 18 months? I hope so for the sake of the country, but who knows?
Rick Newman has just given us our tease for the next special. So we'll say thank you, Rick Newman. Shauna Smith, I will see you bright and early tomorrow morning.